Let's connect then with Sanjiv Bhasin, Director IIFL Securities, now joining in on the show. Good to have you on board and morning. Lots of developments taking place, Sanjiv, over the weekend with respect to that Israel-Hamas war. Just wanted to get in a sense as to how this changes the overall landscape, in particular with the fact that we've seen crude oil prices spike.
Yeah, good morning, Awan. Good morning, Aisha. First, congratulations to all the cricket viewers. We started the World Cup with a bang. The US markets have started to digest all bad news. You saw the best rally in the Dow and Nasdaq on Friday. And yes, we are now in this geopolitical cloud of the Hamas and the Israel, surprisingly big event. But, historically, what has happened is when the first guns are fired, markets generally tend to bottom out. So I would expect in the next 2 days, this volatility to settle down. Yes, crude is a key factor, but let's take it with a pinch of salt. Indian markets are looking to outperform in the near to medium term. And we think that now there will be even more flow of money maybe into India directed, given the weakness in China and given the uncertainty. So I would say that these 2 days will see some weakness and volatility, but it would be a buying opportunity. On crude, it will depend on how Iran gets impacted, and I'm not an expert on that. But given the numbers which are coming, Aman, the demand and the consumption is at a new high, telling you the demand on autos, on cross-selling and on cross transportation, which is a very, very key indicator that some of the OMCs are going to be coming out with bumper results in the next quarter.
Sanjiv, hi, morning. The one stock that you were pretty bullish on, Titan, and what a smart quarterly update, right? A positive surprise there. In fact, they've managed to deliver a 20% year-on-year growth, and I guess it will only get better with the wedding as well as festive season ahead.
Correct, Aisha, and it tells you that the high-end selling is only gathering more steam. And people thought that after the acquisition of CaratLane, it will put pressure. I think that has added to the margins. So clearly, Titan is an outbeat. Also, take it an added advantage that TCS announcing their 5th buyback. So I think Indian corporates are in a very, very fine space. TCS is coming out of the 5th buyback, and who knows, 20,000 crore again on the pipeline, which tells us that the company still feels that the stock, their share price is undervalued, and the return on equity after this equity, that equity will get further extinguished. We'll see a lot of money being made. In simply put, in the last 5 times, if you just sold in the buyback and bought it back, you made a 10-12% hedge advantage, and you've always been in the best of the stock. TCS, by the way, has hit a new high along with Titan. So I think that the optimism coming on the upcoming festive season, Diwali, and a whole host of factors will add to the consumption market doing extremely well.
Can you walk us through what your thoughts currently are on which way one should perhaps look at banks? Numbers are great, quarterly updates are strong, but they're just not going higher.
Yes, rightly pointed out, Nikunj, and that's mainly due to the index, and HDFC being a heavyweight, it's a key factor in pulling down the bank Nifty. I think a large part of the pessimism on HDFC Bank may be done with. If you see their monthly updates and the gross deposits stroke lending, then it's telling me that the credit demand is very, very robust. And I think some of the banks are giving you an extremely good point. Now, obviously, it's been PSUs which are actually hitting new highs, the likes of PNB, Bank of Baroda, Canara Bank. And we have some underperformance in the likes of ICICI and HDFC. But Nikunj, I think this is the time these two stocks, the heavyweights, HDFC Bank and Reliance, these need to show their mettle from today, given that Reliance has again garnered 0.5% for the Reliance retail at 4,500 crore, which values the retail business as close to 9 lakh crore. Then less than 60 lakh crore on the market cap of the entire group is, I think, very, very pessimistic. I think the market cap should be closer to 18 to 20 lakh, according to me. So I think HDFC Bank and Bank Nifty should be a key. And we think as the RBI governor was very bullish. He said the best place to be is in India. So I would take his words to be more credible than this present uncertainty which has been caused by this geopolitical event.
Okay, and among the other results that we'll be anticipating for the rest of the week, there's the likes of a Delta Corp, for instance, a Tata Sponge, Avenue Supermarts. Curious to get in your take, Sanjeev, as to what you think we could see in terms of results, or how you expect the street to react for a Delta Corp and an Avenue Supermarts.
So Aman, I think Delta Corp for long-term investors giving you a brilliant opportunity. This uncertainty on GST will be debatable. We know that litigation on matters extends for anywhere between 6 to 9 months. And anyway, there will be a review on the GST. There's been a lot of opposition, particularly from Delhi Chief Minister and the Goa Minister. And look, Aman, I think gaming and casinos are a very, very big long-term, story. And you cannot ignore it. So Delta Corp at this 135, 140 is giving you a brilliant entry opportunity. Given the uncertainty, the price is in your favor. I think results will be very robust. And the next 2 quarters could be even better, given that festive season and the spending patterns will become more momentum. Avenue Supermart has been a relative underperformer as a stock. The other retail stocks have done well, but I think numbers will be in line, given that their margins should show a slight uptick and the volume should be in line with the expectation. However, like I said, the stock has been a relative underperformer. I would say that this is a value buy, but give it some more time if you want to invest in it.
Okay. Curious then to get in your take on the charts, Kunal, these 2 stocks.
So Avenue Supermart is something which I do like, and in fact, the stock forming a base at 3,500, 3,600 odd range. Interestingly, the stock had managed to break past above the 200 moving average, and the 3 days of price up move which had happened for Avenue Supermarts, that resulted into some extremely strong volumes, both on the delivery side as well as on the cash side for the stock. And the fact that the stock has come back towards a swing breakout after this kind of a price action and volume action indicates that this could be a bigger move for the stock price. Now, the only point with the stock is that it's a typically low beta stock, low to moderate beta kind of a stock. So there will be periods when the stock moves up high in a very short burst, but then post that we would probably expect the stock to consolidate at a higher range. So this is a natural phenomena which happens into stock prices when they move up higher in a short span of time, consolidate for a couple of weeks, and then move up higher steadily. So I think that's the likelihood which I would probably expect for Avenue Supermarts.
Okay, now very interesting stock which hit the upper circuit on Friday, and that was Godrej Industries. Now, of course, we understand that the Godrej Group, which is one of the biggest corporate groups in India, is in middle of a family settlement. Now, there's no dispute. We're talking about a family settlement. The families become big, businesses are getting diversified, and the family split, in a sense, is, I think, something which everybody is talking about. Now, Godrej Industries, I think, is a standout one, because they have a 23% stake in Godrej Consumer Product. They have 47% in Godrej Properties. They have 64% in Godrej Agrovet. Godrej Capital, they own 88%, and they own 100% of Godrej International. Now, Godrej Consumer is the FMCG business. Godrej Properties, well, we all know that. Godrej Agrovet, that's in the business of animal husbandry and let's go back to that graphic again, please. I was just describing all the businesses. Godrej Agrovet, animal husbandry. Godrej Capital, I'm not so sure what it does. And Godrej International, well, they've got a variety of international businesses, largely in the export front as well. So if the Godrej Group demerger has to go through, it would be interesting to see that what happens to the different factions there, and which could be one of the biggest beneficiaries in terms of value unlocking. Well, the markets feel that it could be Godrej Industries, largely because of some of the cross holdings that, there was a time in India when corporate groups had large cross holdings. The Tata Group, we all know that it took years for Tatas to clean up their cross holding. I mean, there was a time when Tata Chemical actually had holding in TCS before it went public. So all that cross holding, I think, has been cleaned out a lot in Tatas. Some of that has been cleaned out in the Birla Group, but a lot will actually change if the family dispute per se goes through. Sanjeev, this could be a special situation, groups suddenly, family split, and it is something which is going to definitely lead to a lot of value unlocking for some few companies.
Correct, Nikunj, and I think that is why you've seen all the stocks do extremely well, particularly the likes of Godrej Property and Godrej Consumer. Godrej Consumer, by the way, was even guided on a better quarterly result than most other FMCG players. And I think Godrej Properties there will stand out. But like you said, it would be the holding company of Godrej Industry, which is still undervalued compared to what their holdings are. And as this progresses, we'll see more color on that. But as a disclosure, Godrej Consumer and Godrej Property both are under our coverage. We own those stocks in our relative client portfolios. And we think that, just the pedigree of the group, Godrej Property, as you know, is now, I think, arguably the largest player pan-India, owning one of the largest land banks in Vikhroli. And Godrej Consumer has been arguably the best wealth creator in the last 3 years on the FMCG side. So I think, like you rightly pointed out, Godrej Industry would be a very key pay to buy because you get a sum of parts of all the holding companies, and a holding company discount is fairly reasonable to buy into.
There's the latest report this morning that's come out on Nykaa from Nomura. They've maintained a neutral stance with the target price at about 163, saying that the first half performance sets up well for the second half, which is seasonally stronger, and that they're seeing the beauty and personal care on track, and even fashion as a segment rebounding quite smartly. Within this space, PB Fintech as well has been in the spotlight, the SoftBank block deal as well. There have been a number of buyers coming in. Just curious, Sanjiv, to get in your take on both of these companies and what your stance is.
Yeah, so Aman, we own PB Fintech, we own Zomato, and we own Paytm. We have not got into Nykaa given the extent of competition and margins being slightly on the lower side. But all those three stocks are under our coverage. We think PB Fintech can be a true outperformer along with Paytm. And given the underlying business, I think the overhang of most of SoftBank's holding is over with. Same is the case with Paytm, and Financial was a big key holder. They are now less than 10%. And I think that given the extent of the business updates and how these have become part of everyone's lifestyle, by Paytm and PB Fintech both can be very, very strong players in the coming couple of years.
Okay, fair enough. That's the view coming in on Paytm as well as PB Fintech. Meantime, let's get in a view on the charts then. And Kunal, just going purely by the movement that we saw on some of those Godrej Group stocks. I know Nikunj just flagged it off on the fundamental side, but Godrej Industries, Godrej Agrovet, how are you looking at these stocks, Godrej Properties for that matter as well on the chart?
So Godrej Industries, of course, I think the stock hit a circuit, upper circuit, 20% circuit on Friday. So we're bound to see an follow-through up move for the stock price, at least in the pre-open or rather in the open. And then we'll see how the stock or the demand for the stock scales up. Because I think it was just in the last half an hour, last 15 minutes that the stock had risen up higher. So there's got to be some bit of added positivity for the stock price. Godrej Properties on the other hand could be interesting because I think that's a stock which had been a huge underperformer. I think the stock had a high which is closer to 2,200 odd levels or more than that. So the stock had corrected more than 50% in the last 2 years and then start to show some signs of recovery. Now back again about that 1,600 mark, inching closer to that 1,675 mark. And the good part is that most of the other real estate stocks are also looking quite charged up and very attractive on the charts. Whether it's the larger cap names like DLF, Sobha, Anant Raj, many of these stocks have shown signs of very strong up move, follow through price action for themselves. So I think Godrej Properties could also be the stock from the entire pack, which would look very exciting on the near-term prospects as well.
Okay.
No, I mean, I'm just looking at real estate stocks, Avan. Anantaraj, 100% higher. 100% higher for real estate. For Anantaraj, DLF, another marquee name, prestige, things in the real estate space are just chugging along very, 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 very smartly. There is an update coming from Som Distilleries not going ahead with the proposed QIP issue. That is something which frankly really does not matter purely in terms of the market positioning. There's another small bit of news that molasses, GST on molasses has come down. It has come down quite dramatically. Now what is molasses? Molasses is something which is used as a raw material it is a byproduct of the sugar industry, but this byproduct of the sugar industry is used by the liquor industry, and it is used by the liquor industry as a raw material, which means that sugar companies may not benefit that much because for them it's a byproduct, but if the input prices go down, in this case the liquor industry actually would benefit. And the molasses consumption, I guess, is maximum if you really go down the barrel, which is that from country liquor to local liquor, and then you move to different qualities of liquor. So it is not that molasses is the universal raw material for the entire liquor industry, but depending on which category or the which product you're talking about, I guess the molasses usage really could be very, very different. Bhasin Saab, there's a lot of action in the entire liquor sector. The bet is that India as a country is moving the per capita curve, which means that from branded retail to better quality, beverage as well as liquor consumption, everything actually is going to be following what global patterns are. If one has to really bet on this entire liquor sector per se, now the options to invest are quite varied. What is the best way to invest here?
Yeah, well, good point. And Nikunj, it's telling you the millennial plus the high-end drinking has also become a very, very big fad. And wherever you go, it's not the choice, it's the best which is always being sought after. I clearly think that a 53% market share, McDowell or United Spirits stands out. Radico Khaitan has been a real dark horse and it has done extremely well on the diversification of its brands in the slightly lower category. But I think both these stocks are headed higher given that we are at the anvil of much better times as far as the spending and as far as the festive season. So I would still give a thumbs up to Radico Khaitan and United Spirits in this brand, in this space.
Up for both Radico as well as USL. Sanjiv Bhasin, great to have you on the show as always. Glad you could take time out. See you tomorrow. Let's